Now, I know what you're thinking. What does this random guy on YouTube know? Well, let's dig a little bit deeper. There's been this big growth of something called zombie companies. There's been a number of articles written about zombie companies recently. And the way that Goldman Sachs describes zombie companies is a zombie company is a company that doesn't have enough profits to service their debts. And so a zombie company is a company that has been reliant on outside money, debt, investment money, in order to continue surviving. And now the interest rates are going up. These companies have to pay more money to service their debts. And so we have about 300 or so zombie companies listed on our stock market. Publicly traded companies. Some of these are multi-billion-dollar companies which are not making enough money from their profits to even just pay off their debts. And so the concern here is now the interest rates continue to rise, and the Federal Reserve Bank is going to meet again in the early part of November to discuss raising interest rates again. And even if they don't raise interest rates very aggressively, they say that they will, they say that they need to, and they say that they're going to continue doing that. But even if they don't raise interest rates, we'll just talk about hypothetical here. Well, that still means that the cost of servicing your debts now is significantly more expensive than it was 12 months ago. And so what the concern is for all these zombie companies is you have dozens and dozens, hundreds of companies that aren't making enough money to continue paying off their debts. And over the next 6 to 12 months, as these costs start to pile up, you're going to see more bankruptcies, you're going to see more mergers and acquisitions because these companies are not going to be able to survive, and that's going to mean layoffs. That's going to mean businesses getting hurt. And this is where you have all these entities sounding the alarm saying, Federal Reserve Bank, stop raising interest rates. Stop trying to fight inflation. Let inflation do its thing. We can't cause a recession. But this is where now the Federal Reserve Bank is between a rock and a hard place where they got to decide, what do we want? Do we want to fight inflation or do we want to fight the slowing recession? I've been talking about this for more than a year now, probably 18 months now, that this was going to happen, and we're seeing it happen right in front of us now. If you've been subscribed to my channel, I've talked about this exact same thing countless times, where what are you going to fight? You can't fight both at the same time. You can either fight high inflation or you can fight a slowing economy. And up until pretty recently, it has been, we're going to fight inflation because there's no such possibility of an economy slowing because it's so robust. It's so strong. Our economy has such a good foundation that raising interest rates won't affect the economy. We saw the Federal Reserve Bank and we saw Zillow and we saw so many entities say the same thing about the housing market, that our housing market is so strong that raising interest rates wouldn't even slow down the housing market boom. It wouldn't slow down housing market sales. Yet here we are today. Interest rates have gone up and the housing market is slowing down. We've seen home sales slow, we're seeing home prices come down, and now we're starting to see the same thing happen in the economy, which nobody, quote unquote, nobody could have predicted. At least the Federal Reserve Bank and the government could not have predicted this somehow. So they didn't predict that our economy would slow. Now here we are today. Our economy is slowing, but inflation is still high. And this is where now this battle is going to become significantly more important and more valuable and more painful because inflation still needs to come down. Inflation is hurting regular people. It's expensive for you to buy groceries. It's more expensive for you to get a home because the cost of living is so high. It's expensive for you to buy things, while at the same time, the economy is also slowing. We're starting to see job openings fall. We're starting to see more layoffs. We're starting to see businesses struggle. And as this happens, the economy slows down. We see the concerns of a potential financial crisis. We saw what just happened in the United Kingdom. If you don't know what I'm talking about, check out some of my other videos or join Market Briefs, which is my free financial newsletter where every day my team is breaking down what's happening in the top finance and business news into a fun, easy, ready-to-read email. You can read it in less than 5 minutes every morning. And not only are you going to be up to date on what's happening in the financial markets when it's happening, but it's going to be a fun read. You're going to look forward to reading Market Briefs every morning because we make it super fun and engaging for you as the reader. So if you haven't joined Market Briefs yet, I got the link for you down in the description below. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide that goes over what passive income is, how to start generating passive income. All you gotta do is click that button right over there. Thank you for watching, and as always, keep hustling.